SPY system right now. It's a 60-minute spider system that generates, obviously, and will show its entries and exits. On TradeStation, if you notice here, when it shows where it enters a long position, then we have the this little red line in the sand is the actual stop. That's a trailing stop function. Then it kicks into another trailing stop function, and there's the trailing stop. And again, the market kicked out of the long position the other day. What happened is it reversed and went short. We held that short going into yesterday, and towards the close, it covered the short, reversed, went long. All right, well, that's going back into the dominant trend of the market. Here's the long position. This morning we walk in the door. There's our stop. It came really close to hitting our stop, and that's all right. It would have given back some profits, but it is what it is. The market obviously had other intentions, and this trade has performed okay. Why okay? I'm a little nervous about this trade. I'm going to tell you why. First off, the volume. This is a volume tool. It uses it looks at volume in a different content than just like on-balance volume. It takes percent change, and it's kind of a sophisticated tool, but it's showing divergence. What do I mean by divergent? As the price has made newer highs in the market, the indicator has made subsequent lower highs. So again, the indicator is going down and the price is going up, and the two lines are separating, diverging. So that, to me, number one, is a danger sign. We'll see when this system will exit this trade, and I'll update you via our YouTube channel videos. By the way, if you like these YouTube videos, give me a thumbs up, or at least write in a comment if you'd like, and tell me what you think or what you'd like to see, and we'll throw those in there. At this point in time, we have a little bit of a channel, trend channel going on, and there's, besides this little 60-minute volume divergence, let's take a look at another divergence, which was really weird. This we covered again today in the live trading room, and I'm not sure who's got this right, the SPY traders going long or the volatility traders moving sideways, but either way, this is the VXXB. It's an exchange-traded note on the VIX, or the VIX futures, shall I say, which is the VIX futures trades off the VIX index, the volatility index known as the fear index. If you'll notice, we did not make a new low in the VIX. Usually, when the S&Ps or the stock market goes up, the VIX goes down. That's the normal relationship. So it's out of sync, it's out of whack. So the volatility index today, while the S&Ps made new highs, while the spiders made new highs, this did not make a new low at all. It didn't even take out yesterday's low, which is really bizarre, and it's something we don't see very often. So it is a cause for concern. Look at our volume indicator. It's showing a higher low or trending, and the market's just moving sideways. So again, the last time we had a market giving us that convergence pattern in the market, we saw a liftoff. Now again, for traders that are not familiar with TradeStation, may I just point out to you, when you get an entry and you see a blue line in the sand, that's a winning trade. When you get an entry and it's a red line, it shows the entry and the exit, and a red line illustrates a losing trade. We are in a sideways range right now, a tight, narrow range. I'm not sure with the volume which way we're going to break out of here, but volatility traders were not too excited about selling the downside on volatility or buying into this rally in the S&Ps. So it's going to be interesting to see how we come out of here, because seasonally speaking, usually we see weakness in the S&P 500 towards the end of the month and towards the quarter. But this one's a little bit different. Why? Well, the rally that we've had, and first and foremost, I want to share this little chart. This is a 5-minute chart on the spiders. It has our volume indicator, and it also has another unique function or feature in the sense that we break down and separate the advancing amount of stocks that are going up on the day versus decliners. And you'll notice right here, one of the really helpful elements of the market is we started off the day a lower open, but the advanced versus the decliners were very negative, and then they started to appreciate all day long. So it's looking at that open outcry session with a lower open, and then today we just expanded to the upside. Strong breadth, and if you look at the volume trend on this 5-minute spider, it's kind of like a different picture in the sense that, look, it starts to do what? It's rising, mirroring the movement in the S&Ps. So again, who has this right? The S&P traders buying everything under the sun, or the volatility traders not trusting this rally? And that's the story we're going to be monitoring as we move forward. It's our job not to be on the wrong side of the market. So with that said, here's what we have in our live trading room. This is an ALgo, or algorithmic generated trading system, that shows traders in the room while it happens live, entries, stop losses, and what it does. And you'll notice today we did see an uptick in that volume indicator right here, as confirming a 15-minute buy signal ensued. Not only did it go long, it shows you where your stop is. And this is a first profit target. So with this model, you can see where it says long entry 2 contracts. So we're always doing a minimum of 2 contracts, and here's why. Because just in case it hits its intended profit target and keeps going up, 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 up forever, we want to do what? Trail a stop. And that's what this model does. Just like yesterday, you'll notice it went long, it got out of half the position, and then it trailed the stop, thank God, right? Because the market sold off towards the end of the day as we saw that volume cave. Now, this is the weird thing. Today, we saw the volume trade off, and the system generated a short. It immediately, as you can see, got stopped out and went reversed long. Our heart's pounding like you're just buying the high of the day when the volume is deteriorating. But it is our trading model. It generated a profit, it got out of half the position, and right here it exits at the end of the day. So the system is flat. So no matter what happens, our traders in our live trading room, they look at this model, they see these signals generated, they see these lines in the sand, and it's posted right here on the board on the strategy positions. Let's take a look at what happened in crude oil. Now today, crude oil, pretty crazy day as well for our strategy traders. As you notice, it went short. We got a short position here. That was the intended profit. But what happened? Do you see that profit, that orange bar? When the market gets near the profit, it kicks in a protective stop. And what happened is it didn't quite hit the profit, went up, stopped it out, went down. Then the next thing you know, it went back up, which is a good thing because the volume section, as you see the volume rising, it joined the trend and it went long. Once again, it's almost near the profit target and it kicks in a stop. Market failed, stopped us out. All right, with a profit. So blue lines represent the profits. Now, here's what happened. This is part of what algo trading and trading is all about. It generated a short trade. It did get stopped out. So red line means it's a loser. And that kind of hurts a little bit because the volume started to taper off. Look at this volume trend, folks. The volume started to trade off as the trend started to develop. And we missed that short little hour break to the downside. But here's what happened. Like all good algo trades and criteria generated models, we did get jumped back on alongside with confirming volume trend moving higher. This again is an indicator worth its weight in gold. Not many traders will show this, but you'll see, for one, that as a buy signal is generated and a strategy signal gets in, and you'll see 2 contracts. Here's your stop, and there's the initial profit target. And as it hits that profit target, there's the emergency stop, and there's the trailing stop, and you'll notice it trailed out perfectly. Note here, by the way, if you see this volume tool as well, I'm really grateful that we had that trailing stop built in, because what happened to the volume? It started to melt down again, and it has that breakdown in the momentum of the volume. Now, lastly, let's take a look at the euro currency signals, and then we'll get into sharing some of the scan results as we head into Friday's trade session. So this is the euro currency. Whale of a day yesterday. How big of a day? Let's take a look. On the strategy, these are the signals. They don't get erased. They are what they are. They're painted on the box. Started off with a nice trade, made some money, got in, got stopped out. It reversed course, went long, and took the whole ride. In fact, this was a beautiful upside move, and it happened with that, again, that volume momentum change to the upside. So today, if you'll notice this little line in the sand right there, well, I drew that in. That's not a pivot line. That's my line in the sand. I put that in for our traders, and here's the reason why. I said, you know, this market has been in a daily uptrend. We've seen stair-stepping. We've been bullish on the euro currency. Seasonally speaking, we typically see the market trade higher in March, end-of-quarter adjustments. Nothing to do, of course, yesterday's move was Fed-inspired, of course. And when we take a look at the market, it's been stair-stepping. You can see our signals here. We don't discriminate. We'll take longs, we'll take shorts as it's deemed. But here's the neat thing. Yesterday, we noted that there was very strong support where we generated some buy signals and, again, sell signals. And that's where that yellow line came from. And I told the community, and if you were in the room today, this is exactly what you saw. I said, you know, it's got a couple little nicks here. It's given back some profits, but we're more likely to come back down and test this line in the sand. As soon as I said that, look at the volume trend. It's going down. And a system generated a short. Not a bad short considering the fact, or at least the trigger, especially if you see that's your entry on the short position right here, and that's our stop loss that was generated by the system. What does it do? Well, good news and bad. It gets out at its intended profit. It trails the stop, and what happened is it bounced back and forth, and the position exited with profits. Now, here's the next thing. Look at the volume indicator, because this was what we did talk about in the room while we were figuring out what about's going on with the equities. Notice that the volume is, the momentum turned positive, and the system generated along. Unfortunately, same thing happens. It takes a small profit. Why? It gets near the profit target, and it stops out. Now, this system does not take any fresh trades after 3 o'clock in the euro currency, and I'm sure you could see why. I mean, it's not one of your more active time periods for trading the euro US dollar. But needless to say, it continued up with that mirroring volume action. So that was our wrap-up of what the ALgo system provided today for our trading community. And everyone, of course, has ample opportunity to piggyback these trades. My concern going forward is looking at the strength of this tape in the equities and what we see going on with the top major sectors. Today's big move in the equities was pretty much inspired by, well, let's tell you what it wasn't inspired by. It'd be easier. It was not inspired by the financials. The financials didn't get behind the rally, and that's why we have that divergence between the regional banks selling off, and I'll share that with you in just a second, and the big institutional banks, and that's why we didn't have the Russell make a new breakout high or the Dow. Let's get into that right now with you. All right, here's our trading room, and again, we have 2 trading rooms on simultaneously, and our clients can flip between the algo room and the main trading room, which we use Thinkorswim here for the main trading room. A lot of stocks that we're looking at. First, the energy. Marathon Oil has had a big breakout, and we were talking about this. This has been up for the last couple days. Looking at a breakout, we did not see participation in the LABU as a leveraged ETF on biotech. Some very big downside moves occurred, and I'll get into that in a minute. Intel. One of the things that we were looking with Intel is that we did see a little breakout, and there's the little breakout right here against the old highs. But what we were seeing is that the volume, now this is a different volume, this is on balance volume. The volume trend was not showing true participation in this rally. And one of the things that we noted that was happening is that in the April 28th, and I think this might be a great opportunity for a neutral, a kind of a bullish neutral strategy. Like, I'm not looking for Intel to crash. And again, Intel relative to the entire semi sector did not take off. So this would be something that we would probably, we're talking about an unweighted butterfly, long under the mark, in the money calls, short slightly at the money or slightly out of the money options as it is right now. So we would be looking at like the 52.5 strike calls against short the 55 with a 57.5 upside protection, but unweighted. So that's another video for another day. This is one that, because of the why we came up with that is, number one, I'm not looking at strong volume performance out of Intel at this point. And number two, that relative strength, that's the PMC. It's the exclusive tool to both my TradeStation indicators and on Thinkorswim. You can find that by going to Studies, All Studies, go to John Person, and there's my name, John Person, and you have PMC, and that's the relative strength tool. That's what you're looking at. You have your PPS, which are those arrows that give buy and sell signals on your screen. And then, again, Person's pivots. So with that said, Intel, while we did have a potential breakout of that swing high, there's not a huge amount of volume associated with that move. And relative to the overall market, it's not outperforming. So I think we may have seen Intel, it could, what we would say, lay back a little bit. Look at the 4 hour or half a day. The relative strength certainly not outperforming the market, and there's really a lackluster volume trend occurring at this rally. It means it's susceptible for not moving up a whole lot more unless volume comes in, and that's why I think over the next 28 days, looking at the April expiration, this would be a neutral strategy that, and that's what we were talking about in the live trading room today. All right. Let's get into the tape here with the rest of the markets so I can tell you what it looks like from both how we head out of the week and from option expiration. First is a quick wrap up. Breadth in the market. Let's take a look at the S&Ps. Broke out with a new high in advanced decline, confirming a potential breakout. Yellow line in the sand, a breakout. Volume, lackluster, scary actually, and I think that's probably why the volatility traders weren't selling volatility, because they don't trust this rally. So that's number one. Breadth today, 443 versus 55, which means 55 stocks out of the entire S&P 500 were down. That's it. And where did those negative readings come from? You're probably going to guess it's staggered, but mainly in the financials. So let's take a look of what I mentioned about the Russell. All right, guys. The Russell underperforming relative to the rest of the market. How do you say underperforming? Well, it didn't break out to new highs. That's why. And the person's pivot is really holding up well in the Russell. The advanced decline is not rising. So we have kind of this little triangular formation, and we do not have a lot of volume. So this is being held back right now. If I draw a little smile there, or sadness, I'm not sure what you want to do, and I'm sorry for that, but what the heck. Now, the Qs, and that's where the strength of the market is. We get a breakout in the advanced decline, and it's all large cap weighted tech stocks. Your Microsoft, your Oracles, your semis, etc., etc. And that's what we found today, the strength in the market. A couple of the stocks that we were faced with looking at, one was Skyworks Solution, and here, well, it's right here on our screen. Skyworks Solution came up on our screen, and one of the things you could see, we saw this, we already did the analysis for pre-market meeting, our morning meeting, which we conduct every day. We said, hey, listen, the relative strength is rising. This thing's getting ready for a breakout. There's Skyworks Solutions. Well, if you weren't able to capitalize on the breakout, I think over the next couple days, we'll probably get a pullback maybe into the, I guess, 83.5 or so. We'll be watchful for a pullback in the next couple days. Skyworks Solution certainly has the potential for further upside. Look at the monthly chart real quick. The monthly chart on Skyworks, we have one of these PPS buy signals. The volume trend is improving, and boy, there's your high. So our risk is a little bit better defined on Skyworks, and it's certainly, if we see continuation up in the technology space, this is one that can see some continuation, that's for sure. So what did we look at, and where do we go from here? So coming into tomorrow's trade, we have, just to define how many new fresh buy signals have populated. So if you'll notice here, it's on March 21st, and if I'm not mistaken, it's still the 21st. At 4 o'clock, we run our scans every day. This is my scans on our TradeStation package, and you will notice technology, Corvo, that one had a huge breakout today, relative strength, light volume. So let's take a look. AMAT, Applied Materials, again, in the semis. AMAT might be one that could see a little bit more upside, a lot more upside, because it is breaking out on a weekly basis. It's finally generating for Friday. If we maintain the price structure above 41.33, folks, the volume's picking up pretty good. And as you can see, it's got, if it wants to get back to, from its a relative perspective, to back to testing its highs of last year, boy, it's got some room to run. I do like the fact that we have a potential triple bottom, and that's where it seems that we have the strength coming in the market. Where's the weakness coming from? Hard to find weakness, relative weakness in the market, but here we go. We have, well, it's hard to find weakness in the market, like I said, but we have some financials, and with today, it was hard to find weakness in the market. So for that, let's turn and say, what was the weakest sector on the market? Regional banks, the KRE. I mean, I've already teed this up for us, so here it is. How much lower can regional banks go? The market is in a breakdown mode. We had a sell signal a couple weeks ago. The Fed yesterday did not help things out for this. The volume wasn't looking good on that accelerated rally, and that's why we have relative weakness in the Russell because of the weight of the KRE. And biotech today got crushed. Biogen was a part of that. One or two names can just wreak extreme havoc on an index, as we noticed with the Dow Jones and Boeing. So take a look at the financials with me. I like the energy XOP. I'm not a big fan of the oil service sector. Note that oil services, National Oil, Welvarco, Schlumberger, Halliburton, when we look at names that were negative, those are the ones that were negative. Oil and gas exploration and refiners, those are the ones I want to stick with. A Marathon, for example, a Hess, for example. Those are the ones that we want to kind of stick with, a Noble possibly. In the financials, Wells Fargo had a big run up, and you know, we just picked up a half position, a small position in Wells Fargo close to the lows. So I'm thinking that the bank and the larger bank financials are going to see some improvement, and they certainly have a ways to go. So let's take a look. The volume action is trending up. The relative strength is underperforming. Why? Because, well, the market's not going up. That's for one. So if we're looking for value or areas that we could see improvement in, it's the financials. For now, until both the relative strength, and look at this, this whole sector is just red. It's weekly sell signal, daily sell signal, relative strength is bad. Yikes. Stay away so far until that sector improves in the maybe next week. Let's take a look. The industrials, very strong move today. A great indicator, rather than looking at Caterpillar, a great indicator if we're going to see the economy turn around would be a company like Illinois Tool Works, guys. It formed a daily high close doji pattern buy signal. Relative strength's not that great, but boy, I'll tell you what, it's hard to see a recession in the economy when a company like ITW, Illinois Tool Work, is improving and breaking out. So we'll be watchful for continuation and end of week buy signals there. Technology was where the action was at. A lot of flashing green. These are all brand new buy signals in this whole space. Semiconductors, big day across the board. Micron Technologies, probably in the news, and everyone making a big deal about how it had a great run up. But if you bought it over here on the highs the other week, you're like you're on your knees thanking God for that you broke even, right? So, I mean, I'm not saying that this is a sector that we chase. It certainly has some upside left in it. It's just the beginning. But do you want to chase a market at resistance? I don't think so. So I kind of would be watchful for some kind of a pullback. It's AMD. They've had the big story this week. They're breaking out. Consumer staples. Look at the color. It looks like a Christmas tree. I want to see the staples move into better performance. I want to see consumer discretionary. Disney, Nike, poor earnings report. Not a big deal. It's not melting off very far. But the bottom line is Disney. These are names in the consumer discretionary that should hold. Disney, of course, is another name that we were watchful for a pullback to be a buyer against longer-term trend. It's not there yet. In retail sector, we were hoping to see a pullback in Ralphie boy, Ralph Lauren. I think as we head into spring, which the first day of spring was on Wednesday, we should see Ralph Lauren start to outperform. Another one is Abercrombie and Fitch. Abercrombie and Fitch has some stellar dynamics. We're praying for a pullback to get long or buy that pullback to fill that gap. I think the longer term trend cycle might be turning for ANF. Let's take a look what I'm referring to. This looks almost indicative of a massive on a long-term monthly chart. Here's your cup. Here's your little handle. Please pull back so we can watch this thing rock. Volume is starting to appreciate, and we see it there with our analysis or our proprietary tool as well. So, I mean, if we can't get a pullback, then we're going to buy the breakout because Abercrombie and Fitch, I think here's the breakout point right there. It broke out, it came back and tested that point of breakout, and I think longer term it's got some legs. So that's what I'm looking at. I'm going down the board with you real quick, maybe covered too much time, but here, Biogen, that's what weighed on IBB. That is ugly, ugly, ugly. I mean, a $100 move on a $300 stock is not good for business. Regeneron, but this is the time of year we should see some upside. By the way, in our room, we're also watchful for a move in maybe the near term. There's in Pfizer, you'll see the couple things that it's kind of good and bad. Good, we have long shadows down here in the 40-42 handle. Pfizer, I don't call that a momentum breakout name. If we want to look at momentum breakout names, let's get into it. But let's take a pit stop here and take a look at transports. Ugliness on Wall Street. I mean, quite frankly, I'm unimpressed with today's percent change gain in a lot of names. JB Hunt, Trucker, it did not see any real improvement in its stock. Southwest Airlines, United Airlines. You look at this, and if you'll notice here on our relative strength reading, it's all red. There is not a lot of solid green happening. When there is, we'll let you know. Just because a stock, Southwest Airlines, is up 2% a buck, forgot to tell you, it's down about $7 or so from its decline. So it's not participating in this rally. When would I be a buyer of Southwest? And when would I feel that the stock market has bigger legs to go? It's when we start to see liftoff in the transports and maybe the airlines can lift off, no pun intended. So here's where we're talking about the momentum names. Your IQ, Double Wise, your Twitter, your Baba, Etsy. Those are the names that really Square, Financial Biz, online payment, unbelievable. Love the stock, and I think it's got a lot more upside in the coming weeks. Let's take a look. The relative strength is starting to show signs of promise, and there's better volume coming into Square. So if it's still holding against a support, and I think that's a promising stock to the upside. Our other momentum names, we've got a bunch of them here that we look at. You look at Arista Networks, Lam Research. This one was in the news the other day. Nutanix, NXPI, semis. Shopify, Splunk, Palo Alto Networks, VeriSign, Intuit, and again, one of the fangs, your Netflix. Today, Netflix had a buy signal yesterday, some follow through. What are we looking to do in the market here? Geez, it's hard for me to want to get expressly negative now that we have a big turnaround. So the one thing that I got to say is it's a very selective market right now as far as equities. I can't get too heavily invested on day trades or married to short positions. Number one, you look at this tape and you say, man, some things are improving and some things are disimproving. And you know what the term would be? Sector rotational grind. And that, my friends, is what this market's undergoing. But when those banks turn around, when the transports turn around, that's when we could really sink our teeth into saying this market is capable of newer highs. I hope you enjoyed my little top to bottom type of market analytics. I don't like to say, gee, I'm bearish the market because I feel it can't go any higher. I like to look at things like the relative strength, the volume, and put it together, and then take a look at the overall market and see what trading opportunities we have. Thank you very much for watching. And again, if you like what you see, leave us a comment on YouTube. Thanks again. Have a great evening, and we'll have an update for the weekend to see how we ended the week and what new fresh buy signals await us for next week.